Hey everyone, my name's Andy. My channel's Finding Value. Today we're going to talk about a clear vision. Everyone's walking around with a certain paradigm and their vision is fogged. In this presentation, we're going to clear that up because the clearer the vision, the better the investor you're going to be. So we'll pop in here. I call it a clear vision. So value and its realization, I've got value on the left and growth on the right. Value is something you need to understand. Value is utility to society. It's realized earnings that drive stocks higher. Sometimes there's value in unrealized future value. You may be valuing whatever they sell if it's a commodity. You're not giving it the full valuation in the future. You're undervaluing it for your calculations in net present value. And then you're also perhaps have unrealized value out there that is future value in terms of exploration in some of these companies. Now on the right-hand side, this is where I think a lot of people get mixed up. There's a lot more danger with growth. With growth, what you're doing is you're paying a higher price today for future earnings. And the risk is that sometimes those future earnings never come. There can be competition that screws up the future earnings. The market conditions can change, and that's really what I'm underlying here is the market conditions will change. And I think right now it's a more dangerous arena to be playing in. Because if you're buying a company and all they have is future ideas, that is basically Enron. Enron, all they did was they took future ideas and then put it on the books today. What people are doing with a lot of these growth stocks, and I'm going to say Tesla for sure, and some of these other technology companies, especially in the electric vehicle arena, is that they're taking future ideas or future earnings that haven't been realized today and discounting them back today and then speculating on those companies and saying, oh, it's going to come, it's going to come, it's going to come. My saying is, well, what if it doesn't come? What if there's shortages of the materials that they want to use? What if their input costs go up 30%, 50%? What if it goes up 500% or 1,000% for nickel? How well is Tesla going to do or some of these other companies? I don't know. So we need clarity and market conditions combined. So, all assets are priced differently depending on the market conditions. Stocks and bonds are priced very highly when interest rates decline. They get higher. They get priced higher and higher and higher when interest rates decline over time. And this is why the Federal Reserve is driving rates down and down and down to hold all this and prop all this stuff up. Commodities are not favored under low inflation rate environments. They do not like this low inflation and declining interest rate environment until the bottom and everything starts changing. So when that starts changing, money's going to rotate between sectors, pushing some sectors higher, commodities, while drawing from other sectors like technology, like consumer staples, like some of these other areas. Assets are going to be repriced in the near future. Real estate and commodities are going to go higher. And what this is going to happen is it's going to draw money from stocks and bonds. Higher commodity prices will impact commodity consumers in a negative way. So you gotta change your paradigm here. You gotta look at things a little bit differently and a little bit more clearly given the market conditions. I call this clouded vision. Most people look at investments of a way to make money. Their question they always ask is, what is my return and by when? And I'm going to tell you this, I think that's the wrong question. I don't think that's the right question. Smart money and those with a lot of money, they think differently than that. They don't think I need to make money, what's my return and when. They don't think that. They think, how can I store my wealth in a high value, something that's highly valued in society? What's a good store of value? How can I preserve my wealth? How can I grow my wealth and preserve it at the same time? You can grow wealth with a business who they start it up in an underpriced environment and then they sell it when it's overpriced. They don't worry about how much money I'm going to make and what's my return and all that stuff in the short run. They don't think like that. They think, how can I provide value and utility to society, and how can I extract value out of it? They're answering a different question. Real money is made when you find underpriced things in society where no one is looking or buying. That's when you accumulate. No one is selling these items because no one owns them. If you buy into something that nobody owns, no one's going to be selling it, so to speak. It's very depressed. It's a lot of the times illiquid in comparison to other assets. And then you get this rotation of money when everything, so you look at out in society and everything changes, the market conditions, people start looking at things with different outlooks. And in the future, they're going to revalue these assets and align it with more on historical norms. So rotation of money will come from an overvalued asset to the undervalued asset. But you have to have the right questions and the right vision. The right question is, where do I want to store my wealth and where is the value to store it? Not, I want to make money. That's what I want to make crystal clear here. You want to look at investments and say, where is the value and where is the utility to society? Because wherever you have those two things, that's where you load up. And I have a quote here from John Goff. He's a major holder in in one of our investments, Contango Energy. The question is, what does the future of energy industry hold? And he goes, I'm bullish long-term on oil, so the family office is very focused exclusively on the oil business. I don't buy into the Goldman Sachs thesis of $20 a barrel oil. They could be right, but long-term, they will be wrong. We are doing it on an unleveraged basis, and we are just doing it with cash. To me, it's a great warehouse of value. And I learned from the master in the industry, Richard Rainwater, who died earlier this week, I find it to be very attractive time in that cyclical business to be an investor. And that's the way that we should be looking at all of these things. You should be looking at it as stores of value. So how do billionaires and myself, I've adopted the way that they think. You should be looking at your investments through this paradigm. We look into the future and we try to see the world through value. And what items in this world bring the most utility to society? Because utility is value. Oil is the number one commodity on Earth, at least in terms of its uses. It brings the most value of any other commodity in the world. Products it creates, plastic, rubber, there's a whole bunch of different uses, and the energy it produces. Silver is the number 2 commodity on Earth in terms of its uses. Every day people are finding new ways to use silver in their products. Platinum, and I have to put my little platinum plug in here. Platinum's an up-and-coming metal where it is finding its ways into new products to push the boundaries of new designs. So I want you to understand the conditions that we have today. We have very low interest rates. We have negative real rates. What that means is inflation is greater than the 10-year Treasury yield. We have commodities at 100-year lows. We have every ratio telling us minerals and commodities have never been this cheap to gold and to stocks. We have real estate going higher. And the reason it's going higher is twofold. We have a shortfall of 4 million homes in the real estate market that still need to be built over the 1.5 million yearly new home demand. And we have a demographic, the millennials that are coming up, that's a little bit larger population. which is going to be a little bit higher demand for real estate, which is a tailwind to our investments on the inflation front, which is going to affect interest rates. So we're going to have larger and larger negative real rates, which eventually they're going to have to raise interest rates to slow that inflation down. That is usually a driver of the residential real estate, is that driver of hiring of interest rates. So the conclusion here and the vision, the way that you're supposed to be looking at all of these investments. So I have if, no, when market conditions change and commodities go far higher, how will assets be valued then? Your vision should look out and say, all right, I've got oil at $40, $45 today. Well, what do those investments look like if it's $200? What do silver assets look like at $500 an ounce? I know that sounds like a lot of money, but I want you to go and I want you to think about what would the world look like if things got more scarce, if things got more expensive, and how would assets be valued at? Because today's valuations are extremely cheap. And I want you to look out 10 years from now and say, well, what if these things go way higher? What does that world look like, and how can we position a portfolio to take advantage of that? And I've got, what does the future look like? How will valuations change based off of these different scenarios? How will Tesla fare with nickel prices being 10 times higher? How about oil prices that are 10 to 20 times higher? What about copper that is 6 times higher? How will some of these companies fare? Will they even be able to sell a car if it's $100,000 or $200,000? Because prices have gone up that much. I don't know. I'm not saying that that's necessarily going to happen, but think through the scenarios. How will these growth companies fare when all their input costs increase? Some of these companies don't have any value today. It's all based off of growth and future earnings. And if everything that is predicted today off that growth is based off of low interest rates and 100-year low commodity prices, that could change quite drastically very quickly. All of those companies could massively decline by 90% if that growth or that vision out in the future changes for all of those investors. So you have to envision and be a step ahead of everyone else. You can't be following the herd. You have to be in front of the herd and selling to the herd. How will commodity companies who hold the most valuable commodities in the world fare under these new conditions that you envision? And I want to say, is the vision clear here? Do you understand what I'm trying to do? It's about visioning in the future and going through different scenarios. If this is priced way higher, if this is priced here, if this is priced way down here, what does that do to the investments that I have? What is it going to do to investments that I'm not in, but I'm evaluating? This isn't a game of following the herd. This is a game of being first, not second or last. You want to be in there. You want to position very well. You want to get your shares when they're extremely cheap on the valuations. So thank you for listening. And this is Finding Value.